Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session this afternoon. Hopefully everyone's had a great weekend, and go Bucks for the Super Bowl. It was an awesome game against the Bucks against the Patriots. Sorry, the Packers. I was hold on a second here. I was actually voting for the Bills to take on the Chiefs. The Chiefs end up winning. But definitely the Packers and the Bucks game was very strong. I didn't think the Bucks would even get this far, but they are where they are. It was an awesome game. I'm definitely rooting for the Bucks. It's going to be an absolute epic game. Looking forward to that in a couple of weeks from now. So everyone enjoyed the football the weekend, enjoyed some relaxation. We're going to go ahead and get into the markets right now. Take a look and see what's going on right here with regards to market reaction. We're going to talk about a few things. I know Chris has got something he wants to share with you regarding the AMC stock that he bought in last week. He's made absolutely a killing on that. You guys need to start paying attention to these details. We've got Tad that is in the room today with us. We've been talking about a couple of things, specifically the Jumpstart program. I'd like to hear a little bit more about the Jumpstart program and how you guys can get plugged in as well. So with that being said, let's go ahead and introduce the team and get started this afternoon. I'm going to go ahead and show the team up right here. We should have, and I'm going to go ahead and double check the audio and so on. But Chris, good day to you, my friend.
Happy Monday, Gary. Hey, everybody. Nice to be with you on AAA.
Yes, it is. Yes, it is. And then we've got Ted. How you doing, buddy?
I'm doing well. Having a good day. Congrats to your Bucks for being the first team to host the Super Bowl at home, so Tom Brady gets to work from home this year.
Yes, he does. Yes, he does. All right, I just had to quickly do a quick refresh on your screen there. It was
there we go.
It was frozen there. But Ted, you should be good right now. Yes, absolutely. Tom is doing a fantastic job. It just shows you how if you got the right people in the right seat, how things move forward for the team and for the game. Let's get into some details other than football, because we can talk about football all day long, and I'm sure everyone's arrived here to talk about the market. So what do we got going here regarding trading opportunities? And Chris, I think I'm going to go ahead and open it up for some good news from your trades that you took last week. What is the deal with regards to the trades that you took on AMC? Just share with everyone what you experienced last week.
Yeah, so here's the deal. It was kind of last week in AAA I talked about AMC, Movie Theater Holdings Group. You know, we know that with COVID, and now we have
hold on a second. Yeah, sorry, Chris. I don't know if it's just me, but I'm hearing a major echo coming from you. Ted, did you hear it as well?
No echo on my end, sir.
Actually, I'm hearing on both your ends here. Huh. Interesting.
Let's ask the crowd. How are we sounding? How am I sounding here? Are we okay? Look for a little comment in the chat.
There we go.
Better?
That looks a little bit. That sounds a little bit better. All right, let's run with that. Let's see.
Denise says wicked echo. Okay.
Try now, Chris.
Okay, I'm speaking now. Let's see if it gets better. I will say that I haven't done anything to the AV settings.
Hey, welcome to technology, right?
All right, it looks like we're good now. Okay, we're better now. Fantastic. Okay, so here's the deal. AMC Holdings, the ticker is AMC. I've been watching this thing for the last couple of months. We know that some sectors got hit really hard last year. We know that travel was down, tourism was down, movie theaters are non-existent for the most part. HBO, that was a big deal. We had delayed movie releases, so Wonder Woman 1984, the James Bond movie got delayed once again. Now that they're launching and going into a movie theater or going into the box office, they're also simultaneously launching into streaming services. HBO Max has procured a lot of these, which is, again, kind of begging the question, are you doing damage to the overall movie theater experience? And look, ask anybody right now, do you want to go to the movie theater? Most people probably tell you no. And I realize that, but I bought AMC last week at $2.14. And I said in the AAA session, I'm buying it for this reason. There is an incredible amount of short interest on this, and I'm looking for a squeeze. And so the risk was to the downside. We had some really good support over last year in March. Multiple times we hit the $2 level. Back in November, we hit the $2 level, and we started out trading it this year once again at the $2 level. So I bought it low at $2.14. Today's high is $4.87. I closed half my position for 110%. I'm looking now for the remainder to run. I have no risk on the trade at 214, so it has to come all the way back down to reset, or if it continues to squeeze and go higher, we have some nice levels above $7, which, do the math, from $2 to $7 is a pretty strong return. I wasn't looking to hold this long term. This was strictly a stock that I wanted to see if there was a short squeeze, and not just AMC, but also we have GameStop, we have Bed Bath & Beyond. We had some wild movements today where there is this crazy chaos, and it's like this squeeze. It almost feels like a pump and dump type movement in the stock market with like massive stocks. So I did a bonus flex room this morning, and we were watching GameStop at the open, and so we opened it was a $40 gap higher on GameStop. We opened around $100. We quickly dropped down to 87. We ran all the way up to $160. That's literally 100% in a day on GameStop, and we have crashed back down to below the start, and we're at like $69. Like, if you look at GME, if anybody's on the charts looking at GME, that stock is absolutely nuts. On a daily chart, it's just a massive wick to the upside. We're currently trading at 71.82. If you're on like a 15-minute chart, it is, everything that was given this morning that ran up, and I mean, it was 100% gain on the day, and it just completely crashed back down to a daily pivot, actually, and a weekly target as well. So it's right there, just a complete fake out, and this squeeze has been really one for the ages. And I was telling Tad earlier that what I've been reading about this GME squeeze is that it basically was a crowdsourced retail trade. Like, all these Reddit users were like, you know what? Let's push this thing. And they just started buying call options. And we started to see this squeeze. And I mean, look, you had plenty of chances from, off the radar below $20. And why did this company actually start to move to the upside? It lined up with something that really has nothing to do with the profitability of the company. But the CEO of Chewy.com, a really big pet retail store that's owned by PetSmart, the CEO became a board member on GameStop. To me, in my opinion, that's not enough to save a company from a stock price of $20 and give them, a reason to go to $160. But the market decided to do something on its own, which is, just go crazy with call options. It was like this really insane retail crowdsource. It was an awesome move. If anybody took advantage of it, I've had friends of mine text me and say that they're long on GameStop. What do they do with it? I just said, look, the best problem to have as a trader is protecting profits. And when you're in at $10 or $17 or $20 and your stock's up at $150, if that's my money, I'm going to some of those profits.
Sorry, dude, I have to stop you there, man. Your echo is horrible right now. But it comes in and it goes in and out. Do me a favor, go ahead and sign out of the Skype call. Come back into the Skype call, and hopefully that'll fix it up. In the meantime, I want to move over to Tad. Tad, what is it that you're focusing in on this week with regards to trading opportunity? I know there's a bunch of things happening right now with regards to FOMC coming out at Wednesday. What is your insight as to what's going to happen with the dollar this week? Any input on that?
That's a good question, Gary. One of the things I want to talk about, what I've been really looking at, a lot of my students in the Analyst on Demand are asking about, is the Aussie pairs. And when are the Aussies going to pull back? Are they going to keep on going up forever? We know that's not the case. But, I mean, they've had some of the best-looking uptrends if you go back to early November or so. Just Aussie, higher highs, higher lows, and the Aussie dollar, Aussie CAD, Aussie yen. We did start to see the Aussie New Zealand, however, pull back. And that's because the inflation expectations were not what they were expecting. Let me get my notes right here. Where did it go? Give me one moment. So I pull that note up. Yeah, so in New Zealand, inflation estimates were expected to be 1.1%. It came out to be 1.4% for year over year. So it wasn't quite where they expected. And we did actually see the New Zealand dollar pull back against the Aussie. So we're seeing New Zealand strength against the Aussie dollar there. Now, is that going to be a continuation? Are we going to see that just dip a little bit, and then we're going to see that continue to go up? That's really the big question on a lot of people's minds here. What are your thoughts on that, Gary? Have you been looking at the Aussie pairs?
You know what? Let me tell you something, and I do apologize here. I'm actually trying to get Chris back online here. There we go. I think it's actually better. I think we may have resolved the problem. So, Chris, you should be back online again. Just say something here, Chris. I want to just make sure.
Yep, let's do a little test. Hopefully this is better. I keep seeing the comments that we recognize that there's some echoes and reverb, but hopefully this is better.
I think we got it. I think we may have sorted it out. Okay, good stuff. So I actually have been looking at the Aussies, and I've got a lot of positions. In fact, we spoke about this in this morning section, target trading, and we've seen that the Aussies have been very strong over the last couple of weeks, and we've had a lot of positions holding. Aussie New Zealand dollar is one of them. We're expecting a downside move in Aussie New Zealand dollar. We're expecting a downside move in Aussie US dollar. We did talk about the Aussie CAD, and we said there's a possibility that the Aussie CAD could rally before it drops back down south again. Now, before I go ahead and just throw numbers out there, let's just get everyone to understand exactly what we're talking about here. And Tad, if you don't mind, we're going to go into the charts right here.
Yeah.
Take a quick look at the charts, and then just go ahead and establish what it is that we're talking about. Well, this morning, just to talk about the Aussies, this morning we went into Aussie New Zealand dollar. Now, I want to show you a couple of things here. We can see that we've had this very strong rally over the last couple of weeks. This is a strong rally we had. Then we finished off with these double tops right here, and the question that a lot of traders are asking right now is, can price move below this 1.0713 level? And the answer to that is, yeah, it can, but we might see a little bounce first. We may see the market bounce first, a little upside move, so a little like a slight bullish move on us. And let me go ahead and just draw it in. I'm drawing up my tool here. We could get a little bit of a bullish move going up right here, and then a turnaround and head back down south, because ultimately we're looking for price to drop to about 1.0626. These are all based on idiot wave structure. You can see right here we had a wave 1, wave 2, 3 up here, 4 right here, and then 5 up here, and now we're anticipating price to move back down. Now the thing here that is a little concerning, and I've only really spotted it right now. You know, it's funny, I've only seen it now. But now I've just seen something that's I'm going to have to make a decision on, and this is this. If you take a look at the setup right here, I just noticed that this is a wave 1, but now we have an inside wave 1 right here. So this is wave 1, this is wave 2. Now we've got an inside wave right here. This is wave 1. Then we've got a wave 2 down here. And then this is wave 3. See how it hits the 1.6 right? This is wave 3. So this is wave 3 right here. And so now we're supported by this support right here of wave 1. So there is actually a very good chance that we could see Aussie New Zealand dollar actually going up and not really going and targeting the 626 level right here. That makes a big difference as to what I'm going to do now on this particular trade, because I have been short on Aussie New Zealand dollar, and because we're coming to the support right here, I'm thinking right now we may opt now to actually go ahead and get out of the short, because we're expecting price to now rally up all the way to this level at around about 1.0890. In fact, it's 1.0900, around about there. And I certainly don't want to hold on to any more positions, because from that point, then I could start seeing price coming back down again, but only until we take out this point. So, with that being said, Tad, it comes back to, I like to look at the overall setups of all the Aussies. And if I go to, let's see if I could go to another Aussie cross right here. And we did speak about
Gary. I just wanted to say like a quick tip to our traders out there. This daily chart where the market recently hit the extension. I mean, those are beautiful tweezer tops right there. I mean, that is an amazing signal that hey, not only did we hit the D, but we also formed tweezer tops, good looking tweezer tops, and that's a good indication that the market's going to pull back. Look at the CCI at the bottom of your chart too. That was way in the overbought. So you had all of those aligning for an upcoming pullback. So for our traders out there, when you see these signs, very large wicks testing these highs and they fail and the market comes back, it does it again and it fails. A lot of times you're going to get tweezer tops. Look to take advantage of those positions. Look to trade in the direction of that candlestick formation. Because it was a daily chart, if you went and measured that, Gary, what were you looking at? Like maybe 40 to 60 pips or so on that pullback? It's hard to tell, but Aussie Kiwi is a relatively slower moving pair.
From the high here, we've had 144 pip drop.
Nice.
Yeah, 144 point drop right here from there. So we're looking for another rally to the upside right here, which is going to be about a 200 pip rally. So I'm expecting a bounce about 200 pip rally on the Aussie New Zealand dollar. Now, take a look over here. If you look at the Aussie CAD, the Aussie CAD right here, we're in the same position right here, but now markets come back down to support here. Here at the 1.618 of the inside swing. You see this inside swing? This is the same sort of swing action we've seen on the Aussie New Zealand dollar. So we've come down to a fourth wave retracement move, and now we're expecting price to go ahead and move back up again. So I would think that, and I'm going to go ahead and flip over, excuse me, I'm going to flip over the currency strength chart right here. And I can see right here we're really starting to build up some strength in the Aussie. So I'm going to say that there's a good possibility, Tad, I don't know, you guys need to confirm this with your analysis too, but that we could see an upside move in the Aussie across the board. And I'm dying here, by the way, just so that everyone knows. I'm actually I'm struggling right now. For some reason, my throat is so sore. But in any case, so that's what we could see. We could absolutely start seeing that movement taking place over the course of the next while. Chris, what do you think?
Well, I think it's interesting that, it's funny how the market sometimes gives us no time to find tops and bottoms, and sometimes it gives us weeks and weeks and weeks. And this seems to be one of those instances where it's now weeks turning into months, where the Aussie structure really hasn't changed to give us that full-fledged confirmation. If you look at something as simple as the Aussie dollar, the Aussie dollar has not broken a really simple trend line that I started back in November. We have the market making higher highs and higher lows. You can see a series of weekly targets going up where price is making higher highs, higher lows. It's going sideways right now. And so the reality is, look, if Aussie dollar breaks through 7,800, it probably has legs to get to 8,000. And that's okay. Like, we're planning for that trade. Like, I don't want it to go to 8,000, but at the same time, it's also the type of trade where if it goes to 8,000, I'm still getting excited to short it. I'm actually, and all I would do is make sure that my trade size is such where breaking that trend line eventually at 8,000 or starting to give us that better confirmation means we're in the right direction. We can start being more aggressive to the downside. But right now, there's a lot of lows right around 76, 60. We haven't taken out those lows. We haven't taken out the highs. We're noticing that the stock market is sideways. The NASDAQ made new highs last week. The Dow Jones did not. The S&P is not. Like, they're sitting right at those highs. But, think about last year's trading. Last year's trading was really, really risk on versus risk off. And so if we don't see a catalyst to really drive that risk off flow, we're probably not going to see a strong move on the downside with the Aussie. The Aussie will be sustained right now. Now, it's interesting that we're talking about this because this week, the Aussie has CPI news on Tuesday night. The Fed has a rate decision on Wednesday. The U.S. has a GDP number coming out on Thursday. So for the kind of the bulk of the week or the meat of the week, Tuesday, Wednesday, Thursday, we are going to notice Aussie dollar should have some action because of that. So my thoughts are, if the Aussie dollar can break below 76.60, maybe that's finally turning the corner, allowing the Aussie to drop a little bit. If we spike but don't close below it, I'm telling you, don't be surprised to see more legs to the upside. The market doesn't want to top right now in stocks, and maybe doesn't want to top right now and bottom out in Forex. So just, again, look at the bigger picture, stick to the bigger time frames, keep the trade size small, don't fight the flow. But I will say this, if we stretch on the Aussie dollar to 8,000, 8,100, I'm just going to get more and more excited about shorting it, because when it does officially confirm a top and we start to retrace, we should have hundreds of pips, I would imagine, to the downside to at least go to like 7,400 or even back to 7,000. So I do think a big trade is coming on the dollar. It's just, sometimes we see tops and bottoms that give us like no time to prepare. And in an instant like this, we literally have months that we've been waiting and waiting and waiting, but that confirmation is going to be critical.
I like it.
What do you guys think about the Canadian? Let's talk about the Canadian dollar, right? What do you think about oil and gasoline? It's based on the fact that Biden's gone ahead and canceled the Keystone Pipe project as things start progressing over the next few weeks. What do you think the U.S. oil is going to do? How do you think that's going to affect the market with regards to that decision?
Go ahead, Tad, if you want to start.
One of the things I've been noticing with oil, if you go to a 4-hour chart, is really in 2021 so far, oil has been in a slightly bearish channel. If you look at a 4-hour U.S. oil chart, you're going to see the tops. You have 3 recent highs that are all relatively in that same area, slightly descending. And you have several lows that are also forming the bottom side of a channel. And this is on the 4-hour U.S. oil chart. If you take a look at that, you got a nice channel. Now, not only do we have a channel going on the 4-hour U.S. oil chart, but I have a long-term trend line that goes all the way back to the lows of October 2020. And the market is sitting right at that uptrend line on my U.S. oil chart. I'm not sure if that's the chart you have up open right now, Gary. Is it?
Yeah.
Okay.
This
cool.
is US oil. Yeah.
Okay. So yeah. And is that the 4-hour or the daily?
No, this is the daily. I can switch it over to the 4-hour right here.
Okay. Yeah. Just so you can see the channel more defined. So right there at the top, right on the very top, we have a very recent bearish channel. So that right where your red arrow is, if you zoomed in a lot, you're going to see this bearish channel with 3 highs and 3 lows. You'd have to go really in to see it. You're far out. But yeah, we're coming up to a trend line that I have on there. So there's your bearish channel. 3 highs, your 3 lows. Market's moving in this pattern here. Oil has been between about, $54 and about $51 so far this year. My question is, are we going to continue to see oil rally ever so slightly? I know the demand has been down over the last 12 months and counting. What do you think, Chris?
Well, I think that oil continues to play out this narrative between what OPEC wants and what the market's been willing to deliver. They've been really firm on their stance of cutting supply. Saudi Arabia alone has cut close to $1 million a day, or 1 million barrels a day. Canceling the Keystone XL pipeline project in the U.S. It was partially under development or under construction in Canada. I think that does kind of sour the relations right now between U.S. and Canada in the near term. But I also know that the U.S. is looking to green technology and a big overhaul. I have a hard time believing that oil is going to be $100 a barrel. And I know that's probably not what anybody in oil wants to hear, but if you look at the overall structure on the daily and weekly chart, where we're sitting at basically all of the support from 2019. If that's going to become resistance, now is that time. And so I've been following, just like Gary has in his chart there, that trend line. If we break and we start to tip over to the downside, I said this morning in my flex room, if we get below $50, then there's room to drop to 40. We've literally recovered from zero. Like March of last year was zero. We've recovered back to 52
at one point. For one day, it went
33 cents, 40 cents. Yeah.
Yeah.
So to recover the way that we have with very little pullback, I just, look, I'm not perma bearish on oil. I'm certainly not going to fight the structure. But if we're going to hold right now, it seems like a really good logical spot to at least show some decline in the near term. I think if we hold these highs, start to break some trend lines, get sub 50, I think we can drop down towards that $40 and $41 breakout area. Look back to 2019, look back to 2017. We'll notice months and months and months of oil going sideways from a low to a high, from a low to a high, from a low to a high. And then something bigger happens fundamentally that creates these massive breakouts. Mm-hmm. So I think that oil is going to settle in. I was looking at the range between like $50 and $40 for a little bit. There's a yearly target actually this year right around $38. So I think, oil could maybe have some legs to keep drifting, right? Still stay risk on around $60, $65, but it would make sense from there between, current price or $60 when we start to turn. There's certainly room to drop towards $40. So
yeah,
go ahead.
Gary. If you look at the charts right here, from a technical perspective, it does indicate that there's still some upside potential. But because of the wave structure right here, we're expecting a downside move in US oil. Now, if I expect a downside move in US oil, then that means that Aussie CAD, I'm going to bring it back to the Aussie CAD, then the Aussie CAD lines up perfectly, because then that would see a rally in Aussie CAD, seeing weakness out in US oil, probably possibly weakness out of CAD. But the thing is this, if we're wrong, if the fundamentals are going to change the overall momentum of the charts, then we could see a total different setup right here. But the way it's set up technically right now, the U.S. oil is expecting a downside move to around about $33 a barrel. Now that's $20 off where it's trading right now. I don't know if we're going to be able to go back at those levels again, but this is where we're at technically. Now, we'll have to look at the alternative if it doesn't plan out the way it is. But But that's going to be interesting based on what you said there, Chris. It's going to be interesting to see how this all plays out over the course of the next couple of weeks.
Yeah, I agree. And again, something to watch, something to keep tabs on. But, typically the correlation is stronger oil, stronger CAD, weaker oil, weaker CAD. And that will probably have an effect on the dollar as well.
Let's move to Bitcoin and cryptos. I know we haven't got Tyson here, the expert in this field, but we're all experts in some way because we've got a lot of money riding on a lot of these trades. What is your sort of like stance on cryptos at the moment right now, especially after Yellen actually went ahead and said that they want to go ahead and stop Bitcoin. They want to just remove that completely, not even allow that to be even a possibility.
I don't know if she said that verbatim. I think she just hinted that there's some darker
illegal
money in cryptocurrencies, and there's double spending and stuff like that, which needs to be looked at. Look, all this right now, cryptocurrencies still remain the Wild West. Forex was the Wild West 20 years ago. MBS, mortgage-backed securities, was a Wild West going into 2008's financial crisis. I think cryptos right now is a Wild West. So, look, I hear this was my talk from this morning, and Tad, I'm curious what you think on this. So I said if I had no exposure whatsoever to cryptocurrencies, there's two sides that you have to think of. One side is this is a bubble, this is worthless, it's going back to $0, this is all a bunch of crap. The other side is this is the new decentralized network, and who knows how high it goes. And the hard part is we don't know how to align with it. It's like this is pure speculation. There's obviously tons of opportunity when you have, holding Bitcoin at $4,000 or $10,000 and watching over the last 4 to 5 months, it's rallied 300 or 400%. That's insane, along with the other cryptos that have followed along with it. So my stance was this morning, and this is purely hypothetical, but I said this to everybody in my trading room this morning. If I had some money that I was like, I'm going to allocate this towards cryptocurrencies. Right now, and live price is $33,950. I don't like buying at this current price, but this is my personal rationalization. If I bought it right now, I would buy small, and I would buy small strictly to be a participant. Because if we go from 33,000 to 50,000 or 33,000 to 100,000, I certainly don't want to miss out on that trade and that opportunity. But at the same time, if you ask me where do I want to buy Bitcoin, where do I want to buy cryptocurrencies, I want to buy Bitcoin at 20,000 or less. So if we come back to 20,000, we come back to 16,000. We know right about now the mining cost for Bitcoin is around 16,000. We have really strong breakout levels because 2018's high was 20,000. If we came back and tested that high to build a support level, logically that's a great spot to trade. So we're looking for some support. There's some pretty good correctional structure going on right now. I would say, Gary and Tad, if we start seeing this choppy move to the downside on cryptocurrencies or Bitcoin, I think that we could build that corrective structure into around the low 20s, like maybe 22,000 to 18,000, and then we start looking for that breakout to emerge once again. So if you're patient, we might see a really good opportunity to buy Bitcoin at a much better price. If we see just pure speculation and just another big run to the upside, like I said, my rationality for buying now would be I just want to participate. I don't want to take a big position just in case it goes lower and I can buy at better prices, but I certainly don't want to see it go to 50,000 or 100,000 without me. And, if Bitcoin runs to 100,000, how great would that be? If Ethereum runs, actually one thing that I'm sure you all looked at this morning is Ethereum. Ethereum is at 1398. We keep poking above those highs, above the 2018 highs. If Ethereum can get that breakout level, Bitcoin broke 20,000, ran to 40,000. If Ethereum can break the 1,400 highs, which it's trying to do, and it doubles, let's say it goes from 1,400 highs to 2,800. That essentially would match the chart. If you look at Bitcoin to Ethereum, if Ethereum ran to 2,800, that's going to be exactly what Bitcoin just did.
Sure.
So there again, it's purely speculative. I know that Yellen didn't have kind words to say about cryptos, and there's a little bit of a decline, but it's still holding. It's not like we saw it crash back down to $10,000. So
sure.
There's obviously a lot of panic going on.
She credits the drop.
Yeah, I agree, and it is what it is. But again, you have to pick what team you're on. Are you on the team that wants nothing to do with cryptocurrencies, or are you on the team that, as an investor, I can define my risk, I can speculate, and I can see what the heck happens?
Yeah. The thing is that the way I look at it. Sorry, Ted, you go ahead.
Yeah, I just want to add one comment when you said earlier how it could be viewed as like the Wild West in cryptocurrencies. I also kind of look at it like the Wild West, but like the gold rush, like a modern day gold rush where people are trying to stake their claim. There is 8,323 cryptocurrencies as of this moment out there. Now, when people went out back west to go look for gold, they're going to stake a claim. Most of those plots are going to come up empty. You're not going to have anything. I look at all these cryptocurrencies that are out there these days as going to be those empty plots of land that are not going to be producing gold. But there are going to be some out there that are going to survive, that are going to take you from rags to riches, that are going to make you wealthy. But don't look into trying to invest in all these mom and pop, quote unquote, cryptocurrencies out there. Look at the big ones. Those are the ones that I think that will survive when other ones do end up falling in the future.
I think that's a great point. That's a great point. And that's awesome.
I think so too. I think that's great. Chad, I think that was a great analogy because I'll tell you this. I've said it last week. I've said it in my trading rooms. This is my approach with cryptos. Cryptos is like a lotto ticket. Just like Chris says, just invest a little bit right there. And if you pick up one of those gold mines and that thing takes off and you bought it at 30 cents a coin, and it's trading at 1,000, 2,000, man, that's going to be a heck of a lot of cash.
Yeah.
But you know what? If you invest in 10 or even 20, you throw, let's say, $500 at each crypto. You invest $10,000 into 20 cryptos or altcoins, not necessarily crypto, but altcoins. So you invest in 20 altcoins at $500 a piece. And it takes two of those, or just one of those to blow out, and you're going to make so much more money than you ever had made on any of those other investments that you've gone into. The thing that I look at, and Chris, I know you mentioned the point about, a lot of guys look at Bitcoin right now. And in fact, I spoke to a couple of guys on the golf course this week. We're talking about investments, and the conversation came around Bitcoin and said, "Did you invest in Bitcoin?" And I said, yeah, absolutely. I'm in Bitcoin, I'm in Ethereum, and all that other good stuff. But the guy says, well, it's probably too late to get in right now. And my advice to him was, listen here, you got to look at Bitcoin like any other investment that you would invest in, right? Chris, you just got into AMC. What did you make? 110% over the last week, right?
Yep.
So now think about Bitcoin. People want to get in. I got to get in Bitcoin, but hold a second. If you buy in, doesn't matter how much you invest in, right? It's a percentage of whatever the values of the coin. So if you invest 30,000 or 32,000, it's going to be 100% of what the coin's value is at. If you invest half of that money, then it's going to be 50% of the value. But the point is, whatever you invest in, you're going to look at the movement that the Bitcoin can move to. Now, let's talk about it moving to, let's say, 100, 110. If Bitcoin goes to 100, 110,000, then what is that type of return on your investment? Well, it's about a 3-to-1 risk-reward ratio, right? You're risking X amount, and you're retrieving 3 times that amount of money back. So, Chris, in 1 week, he made 110%. Now it comes down to, well, listen here, nothing's a sure deal, right? Nothing that you go ahead and invest in, you're going to make 110% in. And so you don't invest all your capital into one thing. But what you do is you go ahead and invest it into certain things that you can get the best rate of return. You're going to look at Bitcoin, and you're going to decide as an investor, is Bitcoin going to give me the biggest return and the quickest return for my investment, or is it going to be something else? Is it going to be a stock that's valued low right now? Is it going to be something in maybe it could be travel stocks. Maybe travel stocks are going to pick up as COVID-19 starts changing. It could be whatever. But if you look at the investment from hey, listen here, if I invest in this, how quickly could I see a rate of return on this investment, and what risk do I have? Now, we speak about the Wild West, we speak about these cryptos being in that realm of being the Wild West. Well, then you've got to say to yourself, do I have risk capital? Do I have enough risk capital that I can put in there that I'm, and I'm at this point right now, like I said, I call these a lotto ticket investments. I'm buying $100, $200, $300 a week on cryptos. In fact, it's probably about $300 a month. And I'm buying different altcoins that I'm expecting to see a big move out of. And my investment, my look on this is it's a 5-year hold, 5-year buy and hold position. And this either works out or it doesn't work out. But I know that in 5 years, if things blow out and things go where we think they're going to go, then I'm going to get a lottery payout. And I've been playing the lottery for a bunch of years, and I haven't got one payout yet. So at least I know I've got a possibility of a payout of 5 years or 10 years from now. But that's how I look at it. And again, like Bitcoin, I don't know, man. If it goes up to 100,000 and you invest now and you buy now, that's 3-to-1 risk reward ratio. You can get more of that out of the currencies. You can get 1-to-3 risk reward ratios buying and selling currencies. So if it is the wild wild west, then some people might say, well, I don't want to be participating in that. I feel more comfortable trading currencies because I can get that 3-to-1 risk reward ratio on a currency within the week. I can do exactly what Chris did and make maybe not 100% in a week on currencies, but that's something you need to evaluate. So yeah.
Well, on the note, it makes me cringe when we use like lottery analogies for trading, because it shouldn't be that. Like, it shouldn't be gambling. It shouldn't be like the lottery. Although I'm sure everybody was excited about the lottery. I know, but I'm saying I'm joking. But the lottery last week was $970 million. And in fact, the ticket was sold like 20 miles away from me. So
I was going to call you.
I don't know if the winner came through yet. I don't think it's been claimed, but as far as I know, the winning ticket was sold at a grocery store about 20 minutes away from me. So It wasn't me.
Are you sure? Are you sure?
Hey, I would, if it was me, I would be ghosting everybody. I wouldn't be here right now. I'd be anonymous.
Yeah, I just look at that from a crypto point of view, because really, like you said, it's the Wild West, man. This thing's either going to blow out or it's just going to go flat dead, and you just got to decide which way you want to go. Are you going to put some money, you're going to put some risk money on that and let it ride, or are you just going to do something else? But look, cryptos is still a way of investing, but it's just a very volatile way of investing at the moment right now, because we can have like comments like Yellen posted, and speaking about these possibilities of, there are illegal things or illegal money traveling through cryptos, and that could create a problem. We don't know. So I'm just going to say that I'm definitely not going to put everything. I'm not going to put all my eggs in one basket and invest in cryptos. Back in 2018, I put a big bunch of money in on especially mining, and where did that go? Nowhere. I'm not saying mining didn't produce money for some people, but didn't produce money for me at that time. So I'm going to put money in cryptos, but I'm definitely not going to lay my bet in it.
Yeah, agree. It's funny that I think we're on the same page here. It's like, Gary, you're looking at it like I've called this the millennial lottery. Like, somebody that has not like, let's say you're out of college, in your first part of your career, you're in your late 20s, early 30s, or you're just somebody that's like, I'm looking to diversify. Look, it's totally a speculative chance, but it is something that if you had $1,000 that you were able to say, here's my risk at all. And I know people that have done this, like, here's my risk at all. If Bitcoin goes to $1 million, was it worth the investment?
Yeah,
absolutely. So it is like that. It's like you could have this kind of this equalizing of, it's hard to play the stock market at 12-year highs. It's hard to justify staying and sustaining a bull market with all the crazy stuff going on right now. You're looking at the inception over a 3 or 4 year period where cryptos have really become mainstream. And yes, they're volatile, and yes, they're wild and crazy, and yes, there's going to be things that make no sense when it goes from 10,000 to 40,000 and 40,000 back to 30,000 or lower. But if again, Denise had said something about regulation. If they become more regulated, if they become, regulation is not necessarily a bad thing when you have larger institutions with tons of capital, if they're willing to put in a portfolio of cryptocurrencies. And whether it stays as it is right now with, the big ones like Bitcoin, Ethereum, Litecoin, Ripple, like if that's your kind of main staples of mainstream cryptos, or if it's something new. I know that Tyson's doing this ultimate crypto course, and he has a whole portfolio like weighed out of, okay, if here's my allocation, here are the percentages that I'm putting in all these different cryptocurrencies. And it's about 9 currencies or something like that, these are my percentage allocations. And that's a portfolio into cryptos that has some decent exposure. And Tad, like you said, 8,000 altcoins or something ridiculous like that, right?
Yep.
Like, it's so many. It's like, I have no interest in doing any of that, like, I'm not going to look for those. I don't care if it's. I mean, let's make one. Let's call it the AAA coin. Let's make one right now.
Yeah.
What's going to happen to that? It's like we've got 100 people watching. Like, you guys going to buy our AAA coin? It's like, I'm not buying that. I mean, there's no tangible value. There's no reason for it. So I just think that a lot of them are, I don't know. They're trying to take advantage of something hot. Maybe I don't know. But again, stick to the staples. It's going to be interesting now for the next probably 3 to 5 years. Where do we go? And that's the uncertainty, and that's a question mark. But you know what? If you're willing to take some risk capital and give it a chance, that's the payout. It's like you risk reward. That's ultimately what you're doing to trade.
Mm-hmm.
So quickly, guys, as we close off today, I'm going to give each one of you 1 minute. Chris, no, I'm just kidding. No, just a short time. What is your focus this week on? If it's the same old, just let us know. But what is it that your focus is on this week? This is the second week that, of course, it's going to be maybe a full week of the Biden administration taking over. Does that affect the way you're looking at the market this week? What is going to be your take on decision making this week, Chris?
Go ahead. Me first, okay. This week, I think a lot of the market volatility could surround the Aussie and the dollar. Honestly, position-wise, I'm not really changing my outlook. I did say in my trading room, and what I'm doing personally is I did take some profit. This was now last week on Monday when we did our AAA session last week. I took some profit on those dollar crosses, and I'm looking to reload. I want to see if the Aussie dollar can revisit the high at 7,800. I want to see if the euro dollar can revisit the high around 2,300. I don't think that the top is necessarily in on the dollar pairs. So I'm trying to kind of work myself through some trades. I think the bigger trade in the next 3 to 6 months is a dollar move. But in case we test the highs again, test the lows again, I'm staying really small and patient. I'm trying to grind a little bit. I'm scalping the Euro Swiss. I'm going to trade some London session stuff this week. I mean, I'm going to keep it pretty much the same. Watching the dollar crosses is going to be my big position trading, and then short-term opportunities. I'll see if I can find some pockets on Aussie crosses because of our CPI news on Tuesday. So, it'll be a busy week as always, but really just kind of sticking position-wise to dollars, and then see what short-term opportunities arise to get some nice trading this week.
All right, good. Thank you, Ted.
What I'm looking at, Gary, this week is our pound pairs. A lot of our pound pairs are at a potential turning point for a bearish movement. Pound Aussie is on a daily chart at a long-term downtrend line, also near resistance. Pound CAD is on the daily chart, and that's at a downtrend line. Pound Yen at a downtrend line. So I have a lot of pound pairs that are in the area, in the neighborhood of either at a downtrend line with an expected turn or ready to go at any moment. So that's what I have my eyes on here this week. It's essentially the pound pairs.
Okay. All right. Sounds good. I'm going to keep it very simple. I'm going to go ahead and show you this. I think this is about as easiest as what I can make it be today and make you understand exactly what my outlook is. I'm going to follow the same sort of guidelines that I've been following every single week. So I'm going to look at the charts, look at the daily time frame, establish the direction of the daily time, and then make a decision as to what time frame I'm going to go ahead and trade that particular currency pair. Depending, of course, if the currency pair is setting up at a very key level of support and resistance, I may go ahead and gear it down on a 15-minute time frame, or I may stay geared up on a 1 hour. It all depends on how it sets up, but I definitely want to go ahead and take a look at the overall directional bias, establish what that's going to be like, and then make a decision based off those setups. We did have a couple of pending positions setting up last week that we're going to talk about this week, which is the Aussie Swiss. We got the CAD Swiss. We had the Euro Aussie as well. Then we had the Pound Aussie and the Pound CAD. Those are positions that we're setting up that we're going to go ahead and take a look at. You do know my stance now on the Aussie New Zealand dollar. I did say that I'm going to look for a bounce of the Aussie New Zealand dollar. And I'm probably going to see a lot of the others as well in the same thing. I know we were selling on the Aussie CAD. That may be, sorry, my bad. We were selling with the target trading setup, but now we're as a swing trader, we're actually looking to buy. You can see there I said buy at support. So I'm actually buying on the Aussie CAD. This may change on the Aussie JPY, and it may change on the Aussie US dollar because we did have sells in last week. We may go ahead and convert that into buys. If I go ahead and do a quick look on, I just want to go ahead and take a look at Aussie JPY right here and just get a quick look at what it looks like. And so, oops, sorry, my bad. Let's move this across here. Let's zoom in a little bit. So yeah, I may still be bearish on Aussie JPY. I may still be bearish on Aussie JPY. looking for price to come back down a little bit lower. We'll go ahead and evaluate it. We did see some great divergence there on the Aussie JPY. That's one that we may stay on a little longer, but there is some upside potential to around about 82.39. I think we're in a short-term downside move before it goes ahead and moves back up again. So that's going to be my outlook. Just keeping to the charts. Let the charts determine our decisions, and then make a decision as to what time frame we're going to trade it on. That'll give us either tighter stops, tighter profits, or wider stops, wider profits. So the ratio is going to stay the same. Always going to stick to the same 1 to 2 risk-reward ratio. That's going to be my ultimate target. But we're definitely going to manage the risk, and the risk is going to be consistent as well. Very important, the risk stays consistent, and that's going to be right through all the trades that I take as well this week. All right, guys. Well, appreciate everyone being here. Tad, thank you very much for jumping in. Chris, always good to see you here as well. You guys have a great week, and we'll see the students next week. All right. Cheerio. Thank you.